Nikkei, which is just marginally in the green. It's around 18 points higher right now.
Indus Towers has reported a loss for the first time ever. At the bottom line, there is a loss of 708 crores.
The U.S. market, the low is in October, we think, and I think this year will be a good year.
Just pivoting around that 18,000 mark on the index. The Adani Group is under pressure.
The US tech space has really done very well in the last couple of months, of course, from very sharp bottoms that we saw last year.
The Q3 new account acquisition has been around 1.6 million, which is a 60% growth as compared to last year.
The Nifty is down 200 points, sensex lower by 650 points.
Hindenburg says that they hold short positions in India's Adani Group via US-traded bonds and via non-Indian traded derivative instruments as well.
For us, Q3 has been as per expectations.
At one point, we were down almost 240 points or so. But all said and done, it's what, 1.5% or not even 1.5% cut, 1% actually after the recovery.
Star being a health insurance company to enter life insurance will be a big move for the company.
Nifty is down 196 points. We also have the Bank Nifty, which is the biggest loser.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell, live from the CNBC-TV18 Motilal studios. I'm Prashant. With me in the studios, my colleagues Reema and Surabhi. Nigel joins in, as always, from the newsroom floor. Guys, hi. Good afternoon. Things are looking a little better as compared to how they were looking in the middle of the day. The markets picked up a little bit in terms of the losses. We're down 180, 190 points. And as we start, I think there is maybe just another small leg down which is appearing. In any case, I think what seems to have happened is that we have shifted once again closer to the lower end of the range that the market has been trading in as compared to the upper end. And the range is 17,800 on the downside and about 18,200 on the upside. There have been multiple kind of, attempts at taking out that 18,200, but so far not really. It's a tight range, and very quickly, just with one day's 200-point sell-off, we are closer to 17,800 than we are to 18,200. The big support for the Nifty really comes in. I mean, if you really want to focus on one big number, it's 200 points away. That is 17,761. And we'll see if that comes into play. Bank Nifty broke the 26th of December swing low, but has bounced off that level a little bit. That level is 41,569. So let's hope we actually close above that today. A closing below perhaps opens up more downside for the banks index. Mid caps and small caps, they've also moderated losses. They're down between 0.75% to 1.5% in trade. Market breadth is negative 1:3 in favor of declines at this point in time. Lots of chatter whether there is something in the budget or this is nervousness ahead of that, etc. It's tough to say, but at least from what we've been reporting, our colleagues from Delhi, etc., I don't think there is anything which at least is suggestive of the fact that some big changes on sort of capital market taxation or anything of that sort. It's obviously tough to say. We won't know till we know. But the fact is, so far we've not really picked anything as far as the budget is concerned. I guess the chatter is because we are just a few days away from that big event, middle of next week. Guys, hi.
Hi. It's just that this fall came from nowhere, right?
Yeah.
The Asian markets were fine. The opening was around levels of 18,000. We were directionless. We were sideways for so many days there, and suddenly slam dunk. Markets went down to levels of 17,850. And we're still unable to find out what the real reason for this fall was. The panic low was 17,850. So in a way, we've recovered from the day's low. We've not broken that long 1 month trading range. As Prashant indicated, the low, the 2023 low, or the big low that everyone's watching, is 17,700 thereabout. So we've not breached the big trading low. It's just that this has been a decisive move lower for our markets. Mid caps are underperforming. The advanced decline ratio is fairly weak. We've got 2 stocks in the green for 3 in the red. Today is, of course, the monthly options expiry for the January month. Talking about some individual losers, Cipla took a big leg down. Earnings reaction, knee-jerk. Stock is down close to about 4%. Muted earnings growth, muted top-line growth. Technology names have started selling off quite sharply. Pull up the intraday chart of Tech Mahindra. Pull up the intraday chart of even something like an HCL Tech, which has been strong post its Q3 numbers, and you would see a continuous slide. So even as the markets have recovered in the last 1 hour, in the technology names where profits have been made, you are seeing selling pressure. HDFC Bank, another case where profits were to be made. The stock was higher for 6 days in a row, and today it's come under pressure. And we spoke so much, right? Budget, it's typically positive for L&T. All the experts came on our channel and said, you know, L&T is the perfect India economy play. But L&T has been under pressure for the 4th day in a row in the run-up to the budget. So it's a 4-day decline coming through on that. On the gaining side today, Hindalco is at the day's high. HUL has been seeing buying amongst all the consumer names that have reported numbers so far. We've seen weakness for most of them. Either it's an account of that extended monsoon in the month of October, which ate away that festive sale, so it impacted in Asian Paints, Pidilite, Colgate, all those numbers were weak, except in HUL. And HUL is where you are seeing some buying. Other auto names like Bajaj Auto, Hero MotoCorp are also holding up quite nicely in the green right now. Some of the other mid-cap names which catch your attention, Indus Towers, maiden loss, stock down 6%, McDowell's, Pidilite, again, underscoring that perhaps consumer trend is weakening.
Well, Rima, you pretty much covered up the stocks. I just want to go back to the point. Frankly, this is not really surprising me for a change today, because we've been discussing this, and I think Prashant hit it on the head. It's nerves, right? It's nerves ahead of the budget. Do you really want to take open positions into the next series when you're at such a big event? Anything can happen. On tax, I've been speaking to a lot of people, on the tax consultancy side as well. I don't think anyone is saying listed equity capital gains change. No one is going with that. But nervousness, maybe. We've been hearing something on the buyback tax, some rationalization like we saw in DDT a couple of years back. But no, that would be an outlier. That would be a black swan if listed equity capital gains regime changes. But I guess nervousness nonetheless. Just to go back and look at the contribution, it's just very simple. There's nothing very meaningful on the upside to pull things higher, barring the auto stocks that Rima mentioned. Banks are where the pressure is. Banks are where the long unwinding has been happening. We saw that yesterday. It's continuing today as well. And obviously, there's Reliance on the other side. So you've got, yes, lever fighting on one end, some metals, and definitely the autos. But banks are so heavy that the net result is on our screen. By the way, we are down again. So the day's low was around 17,840 thereabouts, 848 thereabouts. And we're again down 218. So let's see, 1 hour to go, whether this again exacerbates on the way down. Nigel, hi, what are you looking at? I know you're looking at a lot of the levels today, and levels are very important on a day like today, so fill us in.
Well, that's right. You know, since we have the last 60 minutes of just this expiry itself, I'm looking at the expiry level, and I think we're very, very close to the bottom end of it. So, you know, I know the day's low was at around 17,850 or thereabouts, the number that you just mentioned. But 17,875, that's extremely crucial, in my opinion. You know, and on the upside, I don't think we're talking about that. But the range seems to be this 100-point range. Now, the downside, I'll tell you why. 17,900 put, well, it's very, very active in today's trading session. The premium is around 20 rupees. At the high of today, the premium was 99 rupees. You know, so there was a mix of activity taking place at that level. For those writers, they look to protect this 17,875 odd mark. Upper level, no one's talking about it, but 17,950, well, positioning is such that we shouldn't be getting past that, going by the action on the call side. By the way, all of us are talking about the Nifty, but the Nifty Bank has come in for a special hit today. So that's down close to around 2.5%. And I'll tell you what, on the Nifty, the 17,750 has held out, and we have bounced from those levels numerous times. But on the Nifty Bank, this 41,650 to 41,700, that's been a good support zone. So the odds are that that could hold out. We're not out of the woods, but at least for today's trading session, you know, these levels should hold out. 17,875, and on the Nifty Bank, 41,650 odd. Back to you guys.
Okay, interesting there. Let's tell our viewers what we have on the show today. A whole host of auto and auto ancillary stocks are surging in trade. What's aiding the up move? A quick check on the stocks coming up.
Indus Towers hurts on a key client default, reports its first ever quarterly loss as it sets aside nearly 2,300 crore rupees to provide for a telecom company's dues. All the details coming up.
Pidilite and SBI cards under pressure on the back of weak Q3 earnings. We'll get you the key management takeaways.
And we'll also talk stocks and top portfolio calls with our alpha manager, Ajay Vora of Novuma Asset Management.
Okay, that's the lineup here over the next 60 minutes. How should you position yourself in the last hour of trade? Rahul Mohinder of Viratech.com is joining us right now. Rahul, good to have you with us here. So is this the definitive move? Or this is not the definitive move, and we are still waiting for the definitive move? What's your sense? Would you trade on the back of this momentum we've opened up on the downside?
I think you asked $1 million question. Definitive is the word in this market. But yeah, I think you put it very well. I was hearing you a little earlier in the show. 17,800, 18,200, that's the range everyone's kind of eyeing. And, we've seen this time and again in terms of rotation. As we're at the lower edge, we seem to pick up. So I think today's drop, we're not able to ascertain why exactly it is. It could be, of course, expiration volatility. But I think I'd like to put it this way, that the Nifty Bank is the weaker one. And, I've talked about this argument a few times before in my previous appearances. Nifty Bank is what looks weak to me. And, that's where I see maybe 41,100 to 200. That's the kind of zone I think we probably move to. So I think there is another 500-600 points of pain on that. But, if I look at the Nifty spot, yes, 17,750 odd. That's the key support or the low that a lot of people are watching. But my own sense is the market does tend to get good support. And, when I looked at the internals, looked at some of the heavyweights, I don't think there's that kind of a carnage that's absolutely visible on the Nifty spot per se. So I'd say I'd be tilted more towards selling within the banking names and more towards looking at, at the lower end supports, what can I buy within Nifty heavyweights? So keeping this whole theme in mind, my opinion would be let's go into defensive. So, names like Unilever, ITC, like you can see Unilever on a day like today is resilient. And that's also suggestive technically that, there's good support on the stock at about 25.80. If you can keep a stop loss below 25.80, go long. I think we should safely move to about 27.20 levels. On the other note is technology stocks also look fairly okay. Heavyweights like Infosys and TCS, but I'll pick Infosys. You could buy Infosys. 1525 is very good support. So keep a stop loss, let's say 1520, and go long on the stock. We should see levels of back to about 1585, 1590 come in fairly easily on a bounce back. On the sell side, banking, as I told you, has always been the one which has been on my eye. 1780 being a stop loss, Kotak Bank can again be sold into. I'm looking at targets of 1720 if you're looking at the near term. I do think this can extend a little further more towards 1680 levels as well.
Okay, all right, Rahul, thanks for joining in and giving us that quick update. By the way, the stocks that are taking a harder knock now are Cipla, which is reacting to its numbers, is down close to around 2%. You have Indus Bank as well, that's moved lower. And Tata Motors as well is down close to around 0.5%. It suddenly moved into the red. But otherwise, there's a whole host of auto stocks. Well, they are surging in trade today. Sonia joins us to run us through that list. And why are those stocks moving up? Sonia?
Well, thanks a lot for that. As you rightly pointed out, it's a big move that's coming into the auto space this afternoon. We start with TVS Motor, which is the biggest gainer right now. A 7% rally almost is what TVS is seeing. This after the management gave a very strong guidance post its numbers. They are planning to aggressively expand their electric vehicle portfolio. They're looking to add multiple products across price points in the next 12 to 18 months. And even in the numbers this time, it was the 5th consecutive quarter of 10% plus margins, and they're guiding for volumes of 100,000 units by FY23. So that's a big mover. Apart from that, today we begin the tire companies, coming out with numbers, and CEAT is up 1.5% ahead of its results. Now the revenues are expected to be very strong, 20%, and this is a quarter where profitability will improve for tire companies, considering that both crude and rubber prices are on the downside. So watch for Apollo Tyres as well, because on the 2nd of February is when Apollo Tyres comes out with numbers. There could be some buying perhaps ahead of the earnings. Sona BLW is the other one that's surging away, 5% rally as we speak. The management commentary on CNBC-TV18 was very strong. They expect a 25 to 30% revenue growth in the next fiscal, that's FY24, and they intend to stay at 25% margins. And finally, Mahindra CIE. The stock has been one of the biggest movers in the auto space in the last 6 months. In fact, it's rallied 45% in 6 months ever since the board decided to sell off its less profitable truck forging arms business in Europe. Now, ICICI Securities put out a note where they said that selling off the EU truck forging business would bring in 500 to 600 crores for Mahindra CIE, and the company will now focus on the other part, which is the light truck vehicles in the European Union. So these are just a couple of stocks which are doing very well in trade.
All right, Sonia, thanks so much. On a day like today, we'll take the green with both hands, and most of those names happen to be from the auto space today. Prakash Diwan is joining us on this leg of the show to take the conversation forward. Prakash, great to be talking to you again after a gap. And you're in a happy color, in a happy yellow. We're the ones wearing red. But let me take off from where Sonia just left. Really, I mean, what have you made of the sort of auto commentary and the numbers you've seen over the last 24 hours? Maruti, TVS sounding extremely confident. Let's talk about the OEMs first. What have you made of it? And which stock, OEM stock, would get top billing from you?
Yeah, thanks, Survi, and welcome back. Great to have you chatting on the show again. So, essentially, the auto numbers were supposed to be very specifically different for companies. Okay, there was no broad brush trend that was anticipated, and that's exactly what probably seems to be coming through. So, for example, Maruti had, after a long time, an improvement in margins. Of course, there's a lot that you could attribute to the price hike and the product mix and things like that. And there's this newfound aggression to go back and capture some sort of market share in the SUV segment with the recent launches. And I'm extremely bullish on the launch of the Jimny, because that's going to redefine the company's growth the way the Swift did about 8-10 years back. So, for me, Maruti's numbers are very encouraging. Some of the numbers like TVS, you could probably say, understand that there's a catch-up that it's playing, given the fact that it is into EVs, but the market's probably not fully cognizant of the fact that they are going to be so big here, and you don't see them as active in the market as yet. So that's the thing. And of course, Tata Motors will give us a very good indication of how globally things are taking shape in terms of the chip shortage and general demand trajectories. But overall, though this quarter is supposed to be a soft one for auto players, OEMs, it's turned out to be, till now, it's been fairly decent, and I would expect that Jan, Feb, March is going to be only better. So, all those transitions to EVs, the kind of shortages going, falling way behind you, and ramping up production, demand coming back, all of that's probably very positive for the sector. There could be some re-rating. My topic continues to be M&M and Maruti, for very different reasons, of course, but these two definitely seem to be very strong at the moment.
Okay, thank you very much for that. And hi, Prakash. Indus Towers, wanted to get your thoughts in on Indus Towers. It's a fresh 52-week low on the stock. It's now down to levels of 157. This is after the company reported its loss for the first time ever, a maiden loss of 708 crores, after the company wrote off some of the receivables that were due from one of the leading telecom companies, which should be read as Vodafone Idea. So the company wrote off 2,300 crore of receivables in Q3, and in the first 9 months of the year, they've had to write off close to 5,700 crore rupees. Prakash, the risk is not only this receivables risk, but it's also the dividend risk, because Indus Towers is a dividend-paying company. If they don't get those receivables, their cash flows get impacted, which then affects, their dividend payout and how much they can pay out. And secondly, there's so much uncertainty about the future of Vodafone Idea. And I spoke to many analysts, and they seem to suggest about 35 to 40% of Indus's revenues depend on Vodafone Idea. Given all those uncertainties, where would you put the fair value for Indus Towers?
Good afternoon, Rima. So, I mean, it's a tough call. Indus had finally to bite the bullet. This was definitely something which was in the making, and you could see it coming. And this was a very complex repayment scheme that they'd agreed to, given the precarious financial condition that Vodafone Idea exists into. And somewhere it was to give way, and it has. And unfortunately, it's not just a balance sheet. Right now, you're seeing a significant P&L impact, because that's where they've taken it, right? And my guess is, after this, if you don't anticipate any further write-offs of this magnitude, there could be some more. I'm not saying this is the last. Maybe there could be another quarter of stress. But after the March 23 balance sheet repair or whatever, you had to fracture it, damage it, after that, at least Indus Towers has a very clear trajectory to grow along for the 5G rollouts. Now, you can't do without Indus Towers as a player in the 5G rollout, whether it's Jio or whether it's Bharti. They would have to kind of definitely rely on that. And that's where I think they'll probably be able to make up for a little bit of that growth miss or this huge hit that they've taken. So I think it's going to be difficult times, but they're going through this tightening, belt tightening phase or whatever you want to call it, so that they can survive to be in the 5G space, which is far more promising, and I'm sure the tendencies are going to be far more lucrative for them. So you'll have to wait for that. It's more of a price correction and now a time correction that you'll go through. The fair value, it's probably below fair value if you ask me. The kind of assets that it has and all this has been an unfortunate, unexpected kind of a hit that's impacted the price. But somewhere it'll probably recover and stabilize at this 170, 180 zones.
You know, the only downside risk of even this 5G play for Indus Towers is one, Vodafone Idea so far hasn't participated, and two, even for Bharti Airtel and Jio, they may just go with more loading rather than rather than having a lot more towers. But of course, it's still early days for the 5G rollouts for Bharti as well as Vodafone Idea.
Is there widespread ownership in Indus Tower? I mean, frankly, I've not come across anyone who has. It's completely out of circulation, right? There used to be a point, I remember it before. I mean, actually, right after listing, there was a fair bit of interest because it was one of the first tower companies out there. But it's a one-way secular decline, right? The high was in 2021, $300, 330 or so, and it's basically half from there. Even as, telecom operators have done well. Bharti, of course, is a case in point. But it's an interesting one, and it's a tough one, though, as Rima has been pointing out. We'll take a very quick break here. The first on the show, Prakash stays with us. We'll talk stocks and top portfolio calls, also with our Alpha Manager of the Day, Ajay Vora of Nuvama Asset Management, with us in just a bit.
Welcome back. Pidilite is under pressure in the back of a weak set of Q3 numbers. There's sales weakness, there's a high cost inventory hit, but the management remains optimistic. Manglam is here with the key takeaways. Manglam?
Well, as far as Pidilite numbers are concerned, they were weak, no two ways about it. As compared to our estimates and the street numbers year on year as well, they were, rather weak. 5% jump in the revenue year on year, but as compared to street estimates, they were lower by almost 4% as well. The EBITDA came in shy of 500 crores. We were working with a number upwards of 580 odd crores. As a result of which, the margins and the net profits, both of them were below expectations. The consumer business volumes grew just 1% as against street expectations of 3 to 4%. And the gross margins, while they improved a little sequentially, the management said that, they were still sitting on high cost inventory, as a result of which there wasn't full improvement. But thereafter, we had a conversation with them, and this is what Bharat Puri told CNBC-TV18, that while primary sales were weak because of high inventory in the base, secondary sales, which is what consumers buy off stores, was actually as per expectations. And from this quarter itself, they are likely to see improvement in the numbers. And for the fourth quarter, they do target high single-digit to perhaps double-digit volume growth, and they are yet to see some recovery in rural and semi-urban markets. But, the key raw material that they have, vinyl acetate monomer, VAM, those prices have settled at around $1,200 as well. Back in the peak, they were close to around $2,500. So all this bodes well for their business in the near future and the medium term. However, today it's weak on account of weak third quarter numbers. Okay, all right. Thanks a lot for that, Manglam. Well, Prakash, what do you say about this one? Normally a very, very good quality stock, valuation-wise, it's always traded expensive. But as Manglam mentioned, a disappointment in a couple of aspects, volumes as well as margins. What would you do with the stock?
So I think, Nigel, the answer is in your question. These are wonderful businesses that you would not get very cheap in normal times. It's only when there is some sort of a stress, there is some sort of a question mark in terms of the growth trajectory, which has always accorded premium valuations, is when you would get these stocks at these prices. So I would believe the softness in the stock price is probably not something which is going to be worrying long-term investors, because the brand salience, the distribution strength, the product strength, all of that remains unchanged. It's just a matter of, some more quarters where raw material prices start getting slightly benign. Demand picks up, construction activity would probably start doing that. And all of this tells you that these are stocks that you buy into the portfolio when there is some disappointment. And that this is one of those days, So if you're patient enough to buy and hold for the long term, I don't see any reasons. The PE multiples have always been trading at a premium. It's not that this is the first time you've seen that. And they could go back to premium multiples at some point. But if you're okay with the multiples that prevail now, definitely you could buy it.
Prakash, thoughts on Zomato? There is a sharp fall today, down 8%. The company is now transitioning away from Pro Plus to Zomato Gold. And right now, at least, the initial pricing for the first 3 months is going to be very aggressive compared to competitors like Swiggy. And the analyst read is that this is going to impact the profitability, at least in the near term.
Yes.
Your thoughts on this move from Zomato Gold? They constantly change their pricing and their subscription model for their premium customers. But what have you made of it?
So Rima, when you are the market leader and you actually create the market, you will have to go through this evolution, which is very iterative. They've not been able to get quite a few of those things right, and any attempt at monetizing their properties, their services at the unit economics level is something which they desperately need, right? So that's something which the street has been watching with bated breath. And if that's not coming, in fact, if they're going to be putting good money behind, some not so good money in terms of this thing, where they keep on bleeding again, it's going to be definitely very negative. So all that confidence that's been coming through or has just started coming through will start getting shaken off. So nobody wants to see a situation where next quarterly call you are staring at a big loss again and there's no explanation on how long this loss is. So all of those timelines are a bit of an issue, and some of the leadership problems that they have been facing, a lot of the exits that they've announced, those also kind of haven't been filled back or you've not seen any kind of a restoration of that confidence as yet. So yeah, some long way to go. So I would of course be willing to buy at all, but I would wait for it to stabilize, especially on the operations side rather than the stock price, to look at something from a longer term perspective. But at this point in time, definitely it's an avoid.
Got that, Prakash. Thank you very much for that. You were talking about Indus and its trajectory, Prashant. I started looking at Zomato just to remember the exact high. Talking 154 thereabouts, and right now we're in the 40s, somewhere mid 40s. So a lot has happened. Let's see the road ahead for these stocks. By the way, speaking of stocks, quick point on Cipla. It's still down about 3.5%. The US sales number, revenue number flash. US revenues are actually in line with estimates. They're not that bad. About 195 million, if I remember the number correctly, and the range was about 190 to maybe 213 to 14. So US sales are okay. Perhaps something else that has kind of led to that dent. Some attempt at a recovery or at least stability on the Cipla stock as of now. But okay, it is that time when we reveal the winner of the contest. You came, you saw, and you answered. So thank you, viewers, for participating in the CNBC-TV18 budget quiz. The question that we asked you was, when did Nirmala Sitharaman present her first budget? The correct answer is C, the 5th of July, 2019. And here is today's winner. Congratulations to Anil Raja Pedireddy. Remember, keep watching CNBC TV18 and win prizes daily on the CNBC TV18 budget quiz.
Okay, I think that was also the year when Mr. Jaitley presented his last budget, right? Because, I mean, there was two budgets. One was before the elections, the interim budget, and then there was the full budget, which had happened. Okay, our alpha manager of the day is Ajay Vora, head of listed equity alternatives at Nuvama Asset Management. Ajay, great to have you with us here. Thank you very much. Sorry to have kept you waiting. Just a quick sense, Ajay, if you will, on is there a specific bother for the market, or this is just a bit of a listless, sideways kind of move we're seeing, and really no big dominating drivers or reasons for it? So just wanted to get a sense of what you're picking up.
Good afternoon, Prashant, and thanks for having me. Honestly, I feel that there are two big trends which are underway and maybe outweighing the strong result season so far for us. First being, if you look at the relative attractiveness of other emerging markets, and especially China and few other markets. Over last 3 months, MSCI EM is up almost 20%, whereas MSCI India is almost flat. So you can just gauge from that the FI money, where we have been seeing continuous selling, is moving to other markets within emerging market. And second part is, at the asset allocation level itself, if you look at it, there is a big trend where, if you look at the debt as an asset class, after a fairly long time, is actually offering you fixed income. So broadly, if you look at it, especially during a period where the earnings growth is expected to be muted, and there is a potential to make capital gain as well on the debt asset class, maybe some money is moving towards that as well. So I think these two trends globally is outweighing our strong results, especially from the banking sector. But the good part for us is that, now it has been almost 15, 16 months where we have been in this range of, 17.5, 18,000. So October 21 was when we hit the peak of around 18,500, and we are still at 18,000. So we have spent almost 15 months, whereas the earnings have rolled forward by 12 to 15%. So in a way, the valuations are now looking pretty reasonable versus where we were maybe 2 quarters back.
Ajay, how much more of a catch-up do you think the other emerging markets have to play? You indicated that since the start of the year, MSCI emerging markets have outperformed India by nearly 20%. How much more do we have to go before that levels out and India can start seeing interest?
Sure. So sorry, I mentioned that over last 3 months, not the start of
3
the year.
months, okay.
Yeah, over last 3 months. So my sense is that, if you look at now where we stand in terms of earnings, we are looking at closer to 920, 930 rupees for FY24 for Nifty, and maybe 1,030, 1,040 for FY25. And considering, the very strong numbers from the banking sector in this result season, I don't see any major earnings downgrade at an aggregate level. So I think that a year from now, we should be looking at closer to 20,000 odd levels for Nifty, which is again, around 12-13% upside from here. And broadly, if you look at it, we bottom out somewhere close to 17 times. So with very limited downside, just because we have spent enough time in this range and over last 1.5 year, maybe a quarter more of consolidation, but then we should start picking up. So both things will, catch up. One is, our outperformance in a way we have given up versus other emerging markets, and our valuations have also become pretty reasonable.
By the way, that's heartening news on the green bond front, on the whole effort to go towards sustainability. This is only part of the auction. The government, I believe, is looking to sell bonds worth almost 16,000 crores over several tranches. Today was one, 4,000 crores. This is 10-year green bonds. And the important aspect is that the yield seems to be slightly lower than the 10-year yield. So that's good news. People are lapping up these bonds. And obviously, these are issued by the Government of India. RBI is issuing them on behalf of the Government of India to finance projects on the sustainable side, solar, etc. So that's good news coming in from the bond markets. Well, Ajay, good afternoon. Surabhi here. So, just to talk about this, the whole aspect of the budget is, of course, spurring the economy, capital expenditure, and that's going to be the talk. Now, how that happens, when that happens, we'll get the math on the first. But in terms of stocks, how are you playing this theme if you are? If you're convinced, if you're playing it, then through what category of stocks?
So Surabhi, if you look at the entire composition of the budget, with every year passing by, the only relevant thing where, most of the, I would say, investor community focuses is on the capital expenditure side. And if you look at the entire numbers, how it shapes up, out of a total expenditure, which is expected to be, say, somewhere around 43-44 trillion rupees, where government can actually play around with is close to 8 to 9 trillion rupees. So it's a little less than 20%. And within that, the focus area has always been roads, railways, defense. These are the three big heads where, large part of the capital expenditure takes place. So that is where we need to see where actually the large jump or growth will come into play. And the second part is, I just hope that, we don't see any negative surprises on the taxation front, which is always the worry pre-budget. But if there is some sort of relief in terms of, the taxation slab for individuals, maybe that can spur some sort of, demand on the consumer discretionary side, which has been somehow lagging post the festive season, and especially it's a bit weaker on the rural side. So my sense is that, consumption and investment, these are the two big heads. Investment, as we discussed, it's almost, 8-9 trillion rupees is something where we would focus on.
All right. Hi, Ajay. Good afternoon. Nigel on this side. Ajay, it was heartening to hear that you still believe that the index, the Nifty, will go up to around that 20,000 odd mark, 12%, 13% return that you were mentioning. But let's leave the Nifty at the side, because a lot of retail portfolios, they are not feeling like the Nifty is at around 18,000. It's more like 16,000. What about the mid and the small caps? They had a period of underperformance, but now it appears some of these high quality, richly valued stocks, they're already trading at premium valuations. Is it time now to shift gears and the broader market start outperforming?
So there are two parts to this. Let me first address the small and mid cap side of the market. Actually, if you look at it, historically, this space has tend to underperform when the interest rates are rising, and especially during high commodity prices period. But now, if you look at it, the underperformance is pretty significant in the small and mid cap. And considering the commodity prices have also eased and interest rates have broadly peaked out, my sense is that investors are waiting for this clarity on the long-term capital, short-term capital gain tax in the budget. If there is no negative news on that front, I think the names where the earnings are fully looking on a very growth side and the valuations are also reasonable, they should pick up post the budget. And coming back to the high P names, honestly, I feel that the growth rates have come off pretty sharply in most of the names, and therefore I think that there can be either a period of time correction or a decent price correction, but making a case for an upside for the high P names in spite of business being great, but the growth what the equity investors look for has come down pretty much sharply. So my sense is that small and mid cap post budget, ideally, if there is no negative news, should play a catch up.
All right, Ajay, it's a pleasure. Thank you very much for joining us, and hope to speak with you again soon. 237 points. By the way, the Nifty is back at the day's low, almost at the day's low. The low was 17,846 earlier. We are at 17,882, so just about 30-40 points away. And I think a lot of the Adani stocks are also, I don't know if they're at the day's low, but along with the market, they've also come off. I mean, ports and green transmission, Total, and a bunch of others should come up on your screen as well. They'd all kind of staged a bit of a recovery. There's some selling pressure, which is emerging again, along with the market, of course. We'll take a break. As always, we'll get you a quick check on what's happening in dealing rooms in our segment, D Street Chatter. And of course, we are going to be joined by our technical experts again. We'll tell you what to buy or sell today for a reverse trade tomorrow. Stay with us.
Welcome back to Closing Bell. We are coming to you live from CNBC-TV18 Motilal Oswal newsroom. Well, as we speak, the Nifty and the Nifty Bank, both of them are the very, very crucial junctures. For the Nifty itself, well, 17,775. That's at least got 875. That's at least got defended as of now. So I'd like to close a little about those levels. The Nifty Bank, 41,650, 41,700. Many times we have gone there in the last 1 month and we have popped from there. So the bulls will be hoping that this time as well it does an encore. So let's see whether or not that happens. But let's get into dealing room chatter. Nimesh, what's your sense in terms of flows? India's been underperforming as it is, but what's the flow picture looking like?
Well, tough day for the bulls, right?
Yeah.
FNO expiry, FIS selling, and the Adani Group stocks under pressure, all adding up to India's underperformance in today's trade. In fact, as you rightly pointed out, India has been relatively underperforming the global peers. Like the global is good, right? For the last many days, US markets are good, Asian markets are doing good, but we are underperforming. Largely because of FIS selling and the fact that even the domestic funds seems to have slowed down a little bit. So that's adding up to India's underperformance. In today's trade, the biggest knock has come in the financial stocks. And that shows for the sentiment as well. Despite strong numbers from virtually all the banks, whether it's PSU banks or private banks, still they've got sold into. So that shows a bit of sentiment towards the financial names, at least from the retail investors. That's the overall feedback. On the other side, the sector of the day today is clearly autos on the back of strong numbers from Maruti and TVS. And there is a bit of nibbling continuing in the technology names from the larger institutions. So that's the feedback on the other two sectors. But again, we are now back to the lower end of the trading range between 17,800 and 18,300. So 17,800 on a technical level is an important level to watch. If that gets broken out, you'll see further selling pressure on the Nifty and on the Bank Nifty. But broadly, today's underperformance is largely because of FNO expiry. Also, the fact that there is a fire selling in the larger names and the Adani stocks under pressure is adding to that underperformance.
All right, Nimesh, but tell us about individual stocks. What are you picking up on some of them?
Sure. So in terms of individual names, the first stock on my list today is Hindustan Construction, HCC. That stock is relatively down today, but largely understand the company is likely to bag up very, very large order very soon. So that's something to try going forward as far as HCC is concerned. So that's the first one. The second stock is Indian Bank. We saw the numbers got reported today. Very strong set of numbers. And again, from a flow point of view, this is one stock in the cash market within the financial, which is seeing a good amount of interest from the larger institutions. So the delivery volumes are expected to be quite high. in Indian Bank today. So that's the second one. The third stock is Aurobindo Pharma. For second day running, that stock is under pressure, largely on selling flows at a leading FI. So looks like some large FI seems to be exiting Aurobindo Pharma at these levels. And the last stock is Zomato. No specific news, but the stock was down 10% intraday. Huge volumes on that stock as well. And I believe a leading FI was an aggressive seller in Zomato in today's trade, and hence that stock is under pressure.
Nimesh, thank you very much for that list. The market sell-off has deepened, now below 17,900. Rahul Mohinder is back with us, and he's going to tell us what you can buy today or sell tomorrow for a reverse trade. Rahul, afternoon. What trades do you have for us?
Yeah, let's start with an SBI. I expressed the fact that I'm a bit negative on the banking space. Yes, it's one of those top losers. But what's also noteworthy is today's volume is probably going to end up as one of the highest, daily volumes we've seen in the last couple of weeks. So I think this breakdown is really not just profit taking, it's really getting into a bit of a sell mode. I think we'd probably held to 550, 552. That would be my target. So I'd go short on SBI, keep a stop loss at 581. On the buy side of things, Bajaj Auto has definitely stood out like many of the auto names. And here too, I think the kick up is with a fairly good volume. Again, the daily volume of today will comparatively be significantly higher than the last few weeks. So I think that's again catching the eye. 37.80 would be my target on Bajaj Auto. I'd recommend going long with a stop loss below 36.60.
Got that, Rahul. Thank you very much for giving us those calls this afternoon. Well, let's take it then to Mayuresh Joshi, Head of Equity Research. He's joining us from William O'Neill. Mayuresh, good afternoon. Good to be talking to you. And my first question has to be on the banks. Now, the bank Nifty today is giving you a 1,000-point fall. It's been falling over the last couple of days as well. Are you buying into the weakness or are you staying away?
Good afternoon, Surabhi. Good to have you back. So pleasure to see you back on the streets. Two things. One, as Nimesh pointed out, the numbers have been pretty solid across the banking pack. So whether you talk about the large cap private banks, the mid cap private banks, or even the PSU space as a whole, advances growth has been pretty decent year on year, quarter on quarter as well. The gathering of deposits has been pretty robust as well. So specifically on the PSU part, if you look at Canara Bank, more than 1 lakh of rupees, 1 lakh crore in terms of deposits gathered for the bank itself. There is expectations of steady growth happening on that front. A few banks have also shown solid resilience when it comes to asset quality. In fact, asset quality pressures have come down. Provisioning has remained extremely robust at the same time. So I think the slippages, the restructured book, if you look at the SMA2 book as well, is very much under control. And therefore, I think the solid outperformance that we had seen from the banks, the kind of profit taking that is coming in, I think is more a response in terms of what might get announced in the budgets. And if there is anything detrimental, if further sell-off happens, at least say, let's take some money home. But in my own sense, I think the earnings pedigree should continue for the banks. NIMs should stabilize going forward, but not more in that. So yeah, large private sector, some mid-private sector, and selective public sector as well. Yeah, I think the space looks interesting from the medium term perspective.
All right, Mayuresh, I want to ask you about the city gas distribution companies. We have IGL's numbers that are flashing for you on the screen. And as we speak, on the top line, there's a 100 crore miss. But what the street will like is that the margins are 50 basis points better than what we were working with. We were working with a number of close to around 11%. It's come out around 11.5%. So there is an EBITDA beat despite a top line miss. And that explains why the PAT number is bang in line with what we're working with. Mayuresh, any view on these companies, IGL or any of the other peer set?
Afternoon, Nigel. For the city gas distribution companies in general, the tough environment, specifically in a rising gas scenario, was very, very difficult because the pass-through was not happening completely, and that took a huge toll in terms of the EBITDA margins and the reported EBITDA per SCM. Now, the expectation largely is with gas prices expected to normalize. Natural gas prices have come off quite significantly. You've seen LNG prices come off as well. And therefore, the revision which happens every 6 months, the normal gas pricing should ideally be lower, both on a quarter-on-quarter basis as well as on a 6-month basis. What does that do to volumes? Because I think the pass-through which had happened last time round, the EBITDA margins per SCM should get maintained. At the same time, a lot of the end users, we had been reading a lot of reports at Morbi where Gujarat Gas, a big industrial gas provider, the industrial users were looking at alternate sources with elevated gas prices. They might come back in a significant fashion as well. And with government targets of 15% expected to come through from 6% where we are at this point of time, I think the volume growth should be very, very evident over a longer period of time. So yes, I think there has been a period of underperformance for these companies, but largely I think the numbers should start stabilizing from this point on.
Mayuresh, I have a trader type question for you. But budget is on the 1st, right? I mean, Wednesday. Thursday is the weekly expiry. If you wanted to take a punt one way or the other on the market post-budget, what's the best way to do it?
So Prashant, I think at O'Neill we've got a system where we are waiting for a follow-through day. So basically, I think once the budget is out of the way, and if there is nothing detrimental that the market is looking for, the same evening the Fed will come out with its rate decision as well. I think that is something which favors the markets as well. And if we do see a move of 1.5% on the Nifty immediately after the budget, which is on the 2nd, which is the expiry day, I think the market should be in a fine fettle. And what we've probably looked at in terms of the bottom of 200 points down from the current levels, I think that should probably hold. We should get into a confirmed uptrend, and a whole host of breakout stocks should start getting added on the list. So yeah, I think if nothing is detrimental and we get a 1.5% move on the Nifty or the sensex itself, we'll start buying aggressively with good breakouts on that expiry dates.
Okay, from Friday, by the way, we will now be moving to T+1. Earlier, the settlement cycle was T+2, which means if you buy today, it gets settled in your account only 2 days later. But come from Friday, 27th of January, we will be moving to T+1. So that's going to be a very important change that we will be tracking. But let's talk about the IGL numbers, where margins have come under pressure on a quarter-on-quarter basis. My colleague Sonal is standing by. Sonal.
Well, even though the margins have come under pressure on a quarter-on-quarter basis, Reema, it was largely expected because gas prices, remember, from 1st of October, they did see an increase, and that was expected to put some pressure, especially because IGL had not taken price hikes to the tune of raw material price increase as well. But if we look at the numbers, largely in line, EBITDA is a tad bit higher, and that comes as a positive as well, because we were talking about massive margin pressures as far as these companies are concerned. Margins at 11.5% versus a CNBC-TV18 poll of 11%. EBITDA too has been higher, slightly higher, but yes, it is a tad bit higher than what the poll was suggesting. Revenues are lower, and that's why the percentage EBITDA looks higher than the poll as well. I calculated the EBITDA per SCM as well, and it has come in at 5.7 rupees per unit, which is absolutely in line with the poll of 5.7 rupees per SCM. So there has been no negative surprise, so to say, here. Profits also higher than what the poll was suggesting. If we talk about the volumes, they have come in at 8.01 MMSCMD, and we were working with a number of 8.3 MMSCMD, so a slight decline there. But of course, these numbers are largely in line, and in terms of valuations as well, IGL trades around 19 times one-year forward earnings, which is cheaper than Gujarat Gas at 22 times, but expensive than MGL, which is trading at around 11 times. So all in all, largely in line set of numbers, but a margin improvement, so to say, better than estimates is something which is positive here.
Okay, got that, Sonal. Thanks very much. Just want to point out that in an otherwise absolutely down day, some of these banks, mid-cap banks, are actually doing pretty well. Check out South Indian Bank, UCO Bank, J&K Bank, even Karur Vysya for that matter. They're all stacked up on the top. So it's an interesting trend in an otherwise day where banks are getting smashed left, right and center. Some of these smaller names are managing to find takers. We will take a quick break on that note. We'll come back with more on the markets in just a bit.
Okay, just a minute to go and to market close, and Bajaj Auto numbers are on your screen flashing. Profits at 1491 crores. I think I don't think there's enough time to react to those numbers, but revenues are 9315. It's better. I think the revenue number is better than the poll, and the profit number at 1491 is also better than the poll. So these are Bajaj Auto numbers. Prima facie, the numbers look better than expectation, both on the net profit and the revenue front. And on a consolidated EBITDA front as well. I mean, I think this is meaningfully better. Margins, again, much better than expectation, 19.1% compared to a poll of 17.3%. So we've got the operational numbers as well in terms of the absolute EBITDA and margins. And this looks like a good set of numbers. I think we're just, 20 seconds away to market close. But the stock is spiking, reacting even still as we are closer to the market market close. Well, tomorrow, of course, is a holiday, but today the market is down 200 points lower, 17,911. It's a pretty poor close, all said. Bank Nifty, leaves off very close, 100 points away from the December 26th low. It did not close below it, as we were fearing earlier, but just 120 points away from the December 26th low. So in terms of sheer levels, these are slightly kind of tricky, precarious levels that one would need to watch in the coming days, guys.
On the gaining side, you had defensive buying coming through in pharmaceutical names. So Britannia, HUL, ITC spiking up towards the end. Bajaj Auto just in the last 1 minute of markets closing reporting numbers. What seems to be prima facie better than street expectations. A couple of these commodity names like Hindalco, Tata Steel, also higher in trade, JSW Steel, ending up in the green. Maruti buying seen for the second day in the row. On the losing side, Adani Group stocks took it on the chin. The top nifty loser today was Adani Ports, down close to about 6%. Apart from that, HDFC Bank sees profit booking after 6 days of buying. HDFC Bank down 2.7%. Giving it company are many other banking names. So SBI, IndusInd Bank, Axis Bank under pressure. In fact, the entire banking pack underperformed, and IT2, led by names like Tech Mahindra, HCL Tech, saw some amount of profit booking.
Okay, well, if you look at some of these stocks, actually the Adani Group stocks have gone home with cuts between 4 and 8%. Of course, there was a statement coming in from the group as well against that report. In any case, that's the kind of decline we've seen. Indus Towers, 7% lower. ACC Ambuja, again, for obvious reasons, also slightly on the lower side. Zomato has been the big loser. By the way, the exchanges have sought some clarification from Zomato on their shutting the 10-minute grocery delivery. That's just come on the exchanges a couple of seconds back. But otherwise, a pretty down day for mid-caps. For the Nifty, 17,900. If you're an optimist, you'll say at least the ground didn't kind of give way completely. There was some fight-back attempt, largely thanks to the auto stocks today. Well, with that, it is a wrap on this edition of Closing Bell. Thank you very much for watching, but don't go anywhere. Our special show, What the Market Wants, with Samir Arora, coming up next.